The opposition leader has unveiled the coalition's biggest promise of the campaign, a 1.5% cut to the company tax rate. Sky News political reporter David Lipson joins me in the studio. David, this is a big announcement, a significant announcement, but how are they going to pay for it?
Selena, good afternoon. It's potentially the biggest announcement of the campaign from either side when you look at the dollar figure, because it's expected to cost around $5 billion over the forward estimates. That's the 4 years going forward. How will they pay for it? Well, Tony Abbott says that the coalition has already earmarked $17 billion in savings earlier this year in its budget, the budget reply speech, and also in appearances at the National Press Club. It'll come out from things, for example, of the public service. The coalition has pledged to cut the public service by 12,000 jobs through natural attrition. So they're the type of savings that the coalition has already announced. Tony Abbott making this announcement this morning. Let's take a listen.
A major new commitment. A commitment to reduce the company tax from 30% to 28.5% on the 1st of July 2015. As the former Prime Minister Julia Gillard said in 2012, if you're against cutting the company tax, you're against jobs. As Ken Henry, the former Treasury Secretary, said, the principal beneficiary of a company tax cut is workers.
The company tax cut promise, of course, has been welcomed by business. They'll now, if Tony Abbott is elected, be paying a tax of 28.5% starting from 2015. But Tony Abbott says this is also going to be good for the economy, and ultimately he says that this will improve revenue for the government. But he's not putting in place, or not telling us or predicting how much it'll improve revenue by. He has said that because we don't know the state of the economy, because in his eyes the numbers that the government has put up can't be trusted, they are going for the method of under-promising and over-delivering. Kevin Rudd, though, has a lot of questions about this policy, not just about that sort of detail. He also questions the assumption that it's going to cost about $2.5 billion a year going forward in the frame of a changing and growing economy. Take a look.
They say that if they cut the company tax rate by 1.5, that this will be a cost of $2.5 billion continuing into the future. Now, the last time I looked at anyone projecting a static impact of a tax cut as an economy changes and grows into the future, I just go back to my point that this has not been done thoroughly, and I go back to the core question. When is Mr. Abbott going to put it on the table? Where's the $70 billion cut's going to go? And what's going to happen with the goods and services tax?